In the previous videos, we went through how to draw support and resistance lines, identifying trends, and if a stop price is in a buying position, sitting on the support line. Now we know how to do this, let's review the stocks we found. But before we jump and analyze these stocks, I'm going to create a checklist showing all the indicators on what we'll be looking for on each stock. We need to check the historical trend. Has the price gone up consistently over its lifetime? Has the price bounced from support to resistance at least twice in its latest trend? Has there been higher highs, higher lows, and what is the potential growth? So how much is it likely to grow from support to resistance? And finally, if we were to buy, what price would we buy at? What are higher highs? And a higher high is when the price hits the resistance line higher than the previous time. So in this case, the price comes from the support line, goes up to resistance line, drops back down to support, and when it hits the resistance line again, so in this case it passes the resistance line, is actually higher than the previous time it was on the resistance line. So if the price actually stopped here at the resistance line and didn't actually break through, it will still be higher than the previous time the price was on the resistance line, therefore creating a higher high. Similar to higher highs, and higher low is every time the price hits the support line is actually higher than the previous time it was actually on support. So in this case, hits the support line here, goes up to resistance. When it goes back to support line, the price is higher than the previous time it was on the support line, creating a higher low. The second time, it doesn't actually touch the support line here, but the price is still higher than the previous time it was actually on the support line, so creating a higher low. Another item that we need to add onto our checklist is the number of bounces within the latest trend. Are there more than 2 bounces that we can identify? In this chart, we can see there are 2 bounces. Number 1, it actually comes from support here, goes up to resistance line, and then creates the first bounce. Goes back up to the resistance line, and then goes back down to support and creates the second bounce. Charts with at least 2 bounces shows there is a pattern, and we can guesstimate that this pattern will continue at least a few times. In this chart, we can anticipate the price to go back up to resistance line, and we can wait for it to hit the support line on another bounce and place our trade. Investing for the long term reduces short-term risks on your investments. The stocks we'll be analyzing have had consistent growth over their lifetime. Therefore, there is a high potential for them to continue to grow moving forward. This doesn't mean the prices will never go down. It just means that over a long period, you should receive a return on your investments. But wouldn't it be great to get a return as soon as possible? Buying on the support line will help you achieve this. But profits from support to resistance lines for each company are not the same. If you only had $1,000 to invest, wouldn't you want to know which company could potentially give you the largest return? In this checklist, we're going to add the percentage difference from the support line to the resistance line. This will identify the percentage growth from support to resistance. It could influence which companies we will want to invest in, i.e. the companies with the largest percentage growth from support to resistance.